Things are breaking in the global economy. Bond markets are breaking, forex markets are breaking, stock markets are breaking. Bitcoin surprisingly up on the day. We're going to be discussing that in today's video. My name's Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel. Leave a little thumbs up on this video too if you do appreciate this kind of content. Now let's go ahead and get into it. Let's start off, of course, by talking about this situation with the dollar. Surging US dollar is creating an untenable situation for the stock market, warns Morgan Stanley analyst. A dollar surge could lead to a crisis globally. Now, this dollar rally has been going absolutely nuts recently. We got up to 114.6 yesterday, approximately. Been absolutely powerful watching this rally go on for the dollar, although we are cooling off a bit today. Yesterday's massive dollar rally forced massive pressure on the forex markets, including, of course, very prominently for the euro and the British pound. It also had very big impacts on the bond markets, which is something I want to talk about briefly in this video before we start getting over to talk about Bitcoin. So this is from Jim Bianco. He is an analyst, and he said the lack of breaking, right? So right now the Federal Reserve is trying to break the markets, and the lack of breaking is actually causing the dollar to surge. U.S. 10-year yields rose 24 basis points today, tied for the second biggest one-day rally since the financial crisis. This was historically bad for the bond markets. This will kill equities. And if equities fall another 30, 40%, 25%, that's going to be bad for Bitcoin, most likely anyway, even though we're slightly decoupling a bit today. Break more on that in a minute, but when we see global markets tanking, I don't think crypto is going to be spared in this situation. It's just a full risk-off environment. Everybody's running away from risk, running into the perceived safety of the dollar here. So this is a moment that has historically been very bad for markets. So that is worth keeping in mind. Dan Tapiero also saying the markets cannot handle a 10-year note moving wildly higher in yield. He said, I've never said this explicitly on Twitter, but we are approaching a full-fledged meltdown in financial assets and in the economy. Deeply unfortunate, but it seems to me the Fed has put us on a collision path with collapse. Holy cow, man. There's so many people out there warning this very thing right now. All the signs are there that things are not only bad right now, but they could be getting a lot worse in the not-so-distant future. Currently, we are seeing the S&P 500 in oversold territory here, down at the 27 on the RSI. We do have this current movement for the price where we just caught on at support here, right around 36.30. Now, if we do get this idea, and this is something we talked about a little bit, and we'll expand more as we get closer to the midterms, but the midterm election bounce. Markets are really, really bad right now, but maybe they're going to try and pull out all the stops, release enough strategic petroleum reserves and try and calm markets down a little bit, so we might get a little bit of a midterm election bounce, right? So people feel generally semi-positive, or at least not completely horrible about markets before we go into the election in the USA. Maybe we get a bit of a midterm bounce. If we do, right? Things are pretty bad out there, but if we do get such a thing, then this 3,900 level will probably be a pretty interesting area to keep an eye on. That will probably end up having confluence of the 50-day exponential moving average if we do move back up there in the not-so-distant future. Obviously, once we break support here below 3630, things can get real bad real fast, so that's a pretty important area for us to keep an eye on. Here as investors, a further 12% down for the S&P 500 will bring us back to an important area of price support from 2020. If we get down even further, about 18%, which would put us on the initial targets that a lot of analysts said from about a week ago or so. We might see another 25% correction in the equity markets. Very important area of price support from June 2020, as well as price resistance from mid-2019. Now, Jim Bianco also saying that the S&P 500 price is only down 23.3%. He says the only worst years year to date through September 26th have been 1974, 2002, and 1931. So the 70s had a very bad recession. 2002, this was post 9/11, post dot-com bubble. Markets were terrible. War in Afghanistan, Iraq War coming, all this stuff. 1931, of course, right in the middle of the Great Depression. So this is with the fourth worst year right now on history for the S&P 500. So not looking super awesome, right? You can see most markets years end up in this range right here. We are down in the range where it's basically, it's bad. It's bad, long story short. Now, before we get into Bitcoin, just a quick reminder, of course, that if you are a trader, you need yourself an account over on Bybit. It's the best exchange for longing and shorting Bitcoin, Ethereum, Matic, Cardano. They got all the top stuff there. You can get 0% market maker fees, as well as enjoy 0% fees on their spot markets. And if you use that link down below in the description to start your account, you'll get up to $4,450 in exclusive deposit bonuses. Thank you in advance for supporting the channel by using that link. Okay, now let's talk about Bitcoin. You might be thinking, Lark, why do you have an S&P 500 E-mini futures chart up if we're going to talk about Bitcoin? Because, of course, that is leading the market right now. We are seeing a bullish engulfing candle potentially forming up here for the S&P 500 Mini E futures. That could be a indicator, of course, for why we are getting such a nice Bitcoin rally coming in. There could be the anticipation that when markets open up, we're going to see stock markets rallying. We've had this really, really bad day for Forex markets and for stock markets in general. We came down, we hit that area of price support. Now we might get that bounce upwards. Now look at what Bitcoin has been doing in response to all this. It's been pretty awesome. So we bounced off of price support here at $18,600 approximately. We came back up. We've cut over our first area of price resistance around $19,500. Obviously, we still need to close the daily candle above that. A lot of time, a lot of things can happen between now and the daily close here for Bitcoin. But we are now coming up into a very interesting area of price resistance for Bitcoin. You see this area around $20,500, and we're currently at $20,250 at the time of recording this video, but this area around $20,500, that has been a very key area of price resistance recently. It also gets us very close to lining up with the 50-day exponential moving average at $20,650. Now that 50-day exponential average, as we've been talking about, has been acting as a major area of price resistance. We can see every time previously where we've had these moves above the 50-day exponential moving average, it has acted as a strong area of rejection. Any rallies above it have been very short-lived. So now, if we're watching this, this becomes a time for a bit of caution, right? We want to watch and see if we get rejected here at $20,500 or at the 50-day exponential moving average. Now, if we start closing above the 50-day exponential moving average with some decent volume to back it up, we have seen relatively decent volume yesterday. Perhaps we'll see decent volume by the end of today's candle close. Then we might start looking at, well, okay, can we take in some longs, for example, up into perhaps the $22,000 or $23,000 range in that situation? Perhaps, we'll see. But right now, this is an area to watch as we go into this resistance. Watch for either it to break past resistance with a bit of enthusiasm, or watch for a potential rejection to happen in this area. Again, a lot of that will depend on how stocks perform tomorrow, what we see the S&P 500 doing. And it's nice to see Bitcoin, to an extent, carving its own path here, even if the S&P 500 E-mini futures are leading the markets here before ours open up. But still pretty awesome to see, in spite of all the craziness that's happened this week, that Bitcoin is, was still close to $20,000 throughout all that madness, that now we're actually seeing a little Bitcoin rally coming up. But do watch for any rejections. This is a very fragile market right now. There's a lot of fear in this market. There's a lot of uncertainty in this market. And there's a lot of potential for dramatic price moves down. And you can see that really has played out so much over the past few months. Anytime we get these price moves down, it's like they're like elevators, just smashing us down, smashing us down, smashing us down. So we can get very, very big downward moves based off of bad news. And there's a lot of things that could be bad news, moving events right now on the global macro scene. So just keep all of that in mind. We're watching the 50-day exponential moving average here over the next 24 hours or so, see how that actually plays out. And if we see this turning into resistance, or if we can break past it and start to think about rallying up a bit higher. Like I said, maybe October ends up being a midterm rally month. Maybe we get a bit of a respite in the markets during that time. Anyway, I wish it was different. I wish I had something different to tell you about Bitcoin right now, but I feel like our fate is just so heavily tied at the moment to what is happening in the equity markets. This is the everything crash. And because of the everything crash, Bitcoin has not proven to be totally immune. We've seen Bitcoin largely moving right in lockstep with the equity markets, the S&P 500, the Dow Jones 100 index. That seems to be basically how Bitcoin has been moving. If you overlay the Bitcoin chart on either of those charts, you're going to see incredible correlation between the two movements. And of course, what Bitcoin does affects the rest of the cryptocurrency market largely. Now we see the occasional coin popping off for, you know, some news story. XRP went up by like 65% last week based on, you know, speculation around the SEC case. We saw, of course, Ethereum's big rally around the merge and Ethereum-related coins having a big rally around the merge. And we still will have those narrative-driven rallies in crypto while all the rest of the crazy is going on. So there will be opportunities to keep making money. But until we see a turnaround in equities, which will result in a likely turnaround for Bitcoin, things are going to be rough. Long story short, I wish Bitcoin would go to the moon soon. That would be great. But in this current macroeconomic chaos environment, we need to keep an eye on what's happening in the equity markets, which is why we keep talking about them. I'd like to go back to just talking about Bitcoin again. Not worry about bonds and stock market indexes, but hey, that is the state of the markets that we're in right now. And we need to be paying attention to these things because these are the factors that are moving the markets for Bitcoin. Anyway, just my two stories for the day. Let me know what you think about all this stuff down below in the comment section. Thanks so much for watching today's video, and peace out till next time.